Welcome to The Explainer. You know, every investor knows that feeling, that frustration. You find a great company, you buy the stock, and it immediately drops. The problem, a lot of the time, isn't what you buy, but when you buy it. So today, we're going to explore how a centuries-old Japanese charting technique can help answer that crucial when question.
Okay, let's dive right in. When it comes down to it, successful investing is all about answering two key questions. First, what is a great company to invest in? And second, when is the right moment to actually buy that stock?
And this is the dilemma, isn't it? I mean, you can do all the research in the world, find a fantastic company with amazing financials, but if you buy at the absolute peak of a price run-up, you could be sitting in the red for a long, long time. Timing really can be everything.
And this is where you see the two big schools of thought in investing. Fundamental analysis, that's like being a detective. You're digging into a company's health, its earnings, its leadership, all to find a high-quality stock. That tells you what to buy. But technical analysis, that's more like being a market psychologist. It helps you read the mood of the crowd to figure out when to buy.
So how do these technical analysts actually read the market's mood? Well, they use this incredibly powerful visual tool that translates all that complex buying and selling data into a surprisingly intuitive language.
And they're called Japanese candlesticks. Now, each one of these little candles is so much more than just a data point. It's a story. It's a story of a single trading session. It shows you where the price opened, where it closed, the highest point it hit, and the lowest. It's literally a snapshot of the battle between the bulls, the buyers, and the bears, the sellers.
And that's the real magic here. Instead of staring at a spreadsheet full of numbers, you can literally see the psychology of the crowd playing out. You can see if there was a big, confident push from buyers, or if sellers maybe lost their nerve. The shape, the color, just a single candle can tell you if a trend is picking up steam or if it's running out of gas.
And the best part? This isn't some super obscure, complicated skill that's only for the pros on Wall Street. Not anymore. Modern trading apps have this entire visual language built right in. They can automatically scan the charts and highlight these key patterns for you, making this powerful type of analysis easier to access than ever.
All right, so now we know what we're looking at. Let's start learning a few key words in this visual language. We'll kick things off with some of the most common and, frankly, most powerful patterns you're going to see.
Let's start with a real classic bullish reversal signal called the hammer. Now, what's so cool about this pattern is its shape. See that long tail at the bottom, what they call the wick? That tells you that during the day, sellers pushed the price way down. But then, and this is the key part, the buyers stormed back in and drove the price all the way back up to close near where it started. It's like a visual tug-of-war where the buyers won the final pull.
And right here, you can see a perfect example from a real chart. You can see the app has automatically spotted that hammer pattern we just talked about. It's flagged it with that blue dot, signaling a potential turnaround, a shift from all that selling pressure to renewed buying power.
Okay, next up is an even more decisive signal. It's called the bullish engulfing pattern. And this one shows a complete shift in control, a real power move. So it starts with a down day, a selling day, which is that small red candle. But then, the very next day, bam, this huge green candle appears that completely engulfs the entire range of the day before. It's a really strong sign that buyers have just taken total control.
And just like with the hammer, look at this. The app has flagged this powerful bullish engulfing pattern, this time with a green dot. When you see this, it's often read as a very strong signal that the market's momentum has made a decisive shift to the upside.
Of course, this language works both ways. It's not all about buying. There are also bearish patterns you gotta watch for. Take the shooting star, for example. It's basically the exact opposite of a hammer. It can show up at the top of a big run-up and signal that all that buying momentum is getting exhausted. It's a warning that a reversal might be just around the corner.
So, you've learned a few basic words in the market's language. But how do you go from just recognizing a pattern to actually putting this stuff into practice? Let's take a look at how this works for both beginners and for the more seasoned pros.
Okay, if you're just getting started with this, my advice is simple. Don't try to memorize 100 different patterns. You'll just get overwhelmed. The key is to focus. Learn a handful of the most reliable ones, like the hammer and the engulfing patterns we just covered, and then practice spotting them on big, heavily traded stocks, where the patterns tend to be more reliable. Now, for the more advanced folks out there, a single pattern is just a clue. It's not the whole story. The real key is to look for confirmation. For instance, is that bullish pattern backed up by high trading volume? Did it happen at a key support level where the stock has bounced before? Looking at charts across different time frames like the daily and the weekly helps you build a much stronger case for making a move.
And this brings us right back to where we started. You see, the real power here doesn't come from picking one method over the other. It comes from combining them.
And this quote just nails it. This is the ultimate goal. You use your fundamental analysis, your detective work, to find a great company. That's the what. Then you wait, you watch the charts, and you use your technical analysis to spot that precise moment when the market psychology is shifting from fear and selling to optimism and buying. That's the when. So, by learning to read the language of candlesticks, you're just better equipped to listen to the story the market is telling every single day. And that can help you make more informed decisions, and maybe, just maybe, find that perfect entry point. The only question left is, what story is the market telling you today?